Morning, market chameleons, and my soon-to-appear favorite chameleon, Dimitri Pargamonic. How's everyone doing this morning? You good, D?
Good morning, Will. How are you?
Excellent. Let's jump right to the disclaimer.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer. And with that, I think we'll get started.
All right.
I'm going to share my screen real quick. And today we'll just continue the customer Q&A. So any questions you guys might have could be about the tools, about strategies, options, or stock trading in general. You could type in that question in the live chat. We'll read them back to me. If you think it's more of a in-depth question, Will's going to put in a link that will take you to Zoom. You could raise your hand. We'll put you on live. We could hear the question. Everybody else could hear the question. You don't have to turn on your video camera, but then this way you kind of like walk us through what you're thinking. And then we don't have to speculate or guess, what the surrounding circumstances are. So while we're waiting for the questions to queue up, I'm going to start just going over what's going on in the pre-market report. If there are no questions coming in, I'll just kind of default to some of the questions that I wrote down from emails that I've been getting, from chats, or from previous shows. Okay. So, and I think we did have two questions came up. One at the end of the show, we asked them to come in and just kind of clarify the question regarding gamma. So if that person's in, please, follow that link. You could get on the show, kind of walk us through the thought process and what this question regarding gamma was. And then we had another person. We did a show yesterday with interactive brokers. We're getting a lot of good questions. Some of them started coming in that were more involved in depth with different variables going on. So if you're there today, you want to come on the show, kind of come on live, just let us know, what the scenario is, what the surrounding circumstances are. This way we could just, maybe find a similar situation, but that really helps us in our discussion. Okay. So without further ado, let's just go to the pre-market report right now. And we're on there right now. These are stocks that are trading in a pre-market hours. We got the most active stocks, the biggest percentage gainers, biggest percentage decliners. 83 stocks made our percentage gainers list, 39 on our percentage decliners list. So from there, that perspective looks like a little bit more bullish bias at the open. Let's take a look at the higher market cap stocks, see if we see a similar picture. So I'm going to use this market cap filter, $20 billion or higher. So stocks that are $20 billion market cap or higher, we see 20 made the percentage gainers list there, 4 on a percentage decliners list. These lists not very big, relatively small. I would say, they're small enough that it's probably a mixed bag at the open, but just looking at these lists, a little bit more favorable towards the bullish side, 20-4, right? So it's 5-1 so far, favoring the bullish side at the open. Let me know, Well, if you have any questions coming in. I'll start with that. I think the one question had to do some with gamma strike. Didn't quite understand it. It was coming in from the chat. So not sure exactly what the question is. If you could come on.
Well, we have Albert, who was on yesterday. I forget, we had a couple people who were willing to ask questions, and I'm not 100% sure, but Albert did pop over. So okay. He's willing to ask a question. So we'll pop Albert in. Is that all right?
Yep.
All right, here we go, Albert. We'll give it a try. We're allowing you to talk. Thanks.
Hey, Albert. I think you're still on mute.
Yes, I am.
Hey, Albert, how's it going?
Thanks for joining, buddy.
No problem. Glad to be on again. It's a privilege to be on. Thank you.
Awesome. Thank you.
Yes, the question was related to the key gamma strike. What I referred to, or the idea, my thesis behind this is that, well, you have the market makers, they hedge. No, the assumption on single stocks is that the traders are long calls, and therefore dealers are shorter calls, and they have to buy stock to hedge, to be delta neutral. Now, as the expiration comes along, if there's enough calls, dealers will be gamma positive. And therefore, as there's more and more gamma, dealers, volatility will be compressed, and therefore the largest strike where this hedging occurs is what we call the key gamma strike, and therefore it'll act like a magnet. This strike price will act like a magnet because dealers, because they're positive gamma, as price rises they sell, and as the price decreases they have to buy. And therefore it acts like a pin. This key gamma strike acts like a pin, and the play, either you can sell straddles, or there are different plays you can make. So my question is, that's the context. My question, or the thesis, my question is, do you have a metric in the option chains that can help us determine, besides the open interest, which tells us what strike, but the level of gamma that has been accumulated or re-hedging by market makers so that we can make a play?
Yes.
I don't know.
Yeah. Thanks for the question. I think I understand. I think I understand the question. And it, because
does it make sense? First of all, what I'm saying.
Well, it makes sense what you're saying from the perspective of a market maker would be hedging their delta positions, or their gamma, using their gamma to basically trade the implied volatility versus the realized volatility. To do that, you're trading your gamma. The conditions that you're looking for, do you have a stock you want to look at as an example? Lately I've
been looking at Moderna.
Okay.
There's a lot of gamma. The people have been trying to, traders.
What is that? What is that symbol?
I think that's mRNA.
Okay.
Currently, on the weekly, the 500 strike seems to be the biggest open interest, and therefore the theory, if I've understood correctly, prices, if there's enough call buyers, the gamma effect will, the gamma will attract the 500 strike. The price will end up near the 500 area at expiration. Theoretically, if there's enough options volume to bring it up there. So if you think it's going to be pinned around 500, you can maybe sell premium at the 550 and with like a naked call or something, or you could do a credit call spread and with a high probability, knowing that the price might not make it past the 500 because that's the largest gamma is around the 500. So market makers will have to re-hedge around that number, or it'll be attracted towards that number.
So, and I'm just kind of looking at the board here, and there's lots of open interest, in every strike. I think that this assumption is kind of like, at least from here, I'm looking at.
Not to sugarcoat it, Dimitri. I can take it.
Yeah, no, I'm trying to word in a way where there are a lot of variables going on here. Okay, besides this, and I'm not sure that this open interest is significant enough anyway, because I'm looking at the average daily volume of the stock. I'm not sure if this would be even enough to really do anything. But it's kind of in this scenario, it would be very hard to predict, because the assumption is that either the stock, because of this open interest, will break through this strike, or it will just sit there and the gamma players will hold it on that strike, right? They will.
I agree with you. I agree with you, Dimitri, that it works best with, there are assumptions and variables, and it works best, in my humble opinion, with meme stocks, because one of the assumptions is that we have to take into consideration is, are people long calls or short calls? Because open interest doesn't necessarily mean that the dealers are short those calls. So, and what you did yesterday, I think it was on the IB webinar about open interest. You have to look at the percentage of the open interest volume compared, or the options calls volume compared to the total volume of the daily stock. That's another variable.
And that exactly, there's a lot of variables to consider. Like you said, maybe in the meme stocks, because the idea here is that this stock here, Moderna, it's probably widely held, and it's almost impossible to know, the positions, who's holding these options, and how they're going to hedge. So even think of market makers. Sometimes we don't really know their entire, you don't know the dealer's positions. It could be, the dealer could be, even if it's a dealer, right? We don't even know. It could be lots of different people. This could be chopped up in so many different ways that it's like not even significant. And it could be, people with other positions.
That open interest can also be part of a combo, a condor or a two-legged strategy or something.
Exactly. Yeah. Right. Like you could see there's so many different open interests here. So you don't even know the entire position. And that also, any dealers with bigger positions, they could have other structured over-the-counter derivatives to offset these things, so it's very difficult to know what the dealer will do. And it's not likely, that a dealer is exposed to, like, he's going to have to all of a sudden shoot in of, buy 2 million shares at the market and impact the price. It's not likely they're going to do that. Even if they have a delta that they need to get rid of that's significant, they'll probably VWAP out of it throughout the day. So it's going to get chopped up into small pieces, and it's looking for, there are algorithms already looking for that liquidity, in a dark pool to get matched up. So it's not likely that you're going to see like a dealer. Market makers in general are the smartest people in the game. They kind of have to be, right? It's kind of like, it's like the banks have to be smart or they're going to go out of business, and the market makers are smart, and they're not going to get gained. They're not going to, there's not going to be this free money that market makers are going to give away. And sometimes in the meme stocks, even what happened, it might happen, but it's not going to repeat itself, right? So the market makers adjust really quickly. And who are the market makers? It's like, you got like Goldman Sachs, Citadel, Susquehanna. They've been in the business for decades. So to assume like, that you could game them, it would be, they're very smart, right?
The objective around my thesis is not to, I don't want to be, I'm directional, but I don't want to, it's like trying to putt. No, you have a small hole, but what if that hole was 2 feet wide? No, right. You don't have to be in the dead center. You just have to be in the proximity. So if you're within the gimme zone, like in the sense that if you're within the 2 feet range of the pin, that's close enough. I don't want to pick a direction. I don't say 500. That's why if the probability based on the hedging flows or the gamma levels are around 500, you can always take like a strangle or a strato or sell out of the money within, you can pretend that that is the current price, and you sell premium outside that range. So even if it's, since you're selling, your break even is even higher, the idea is that you don't want to guess, because the market is random, and you can, you know, based on, you know, Gaussian and Wiener process. Anyways, that's
Yeah.
you just want to be in the proximity, so that you can
Right.
collect premium or get out at 50% of the premium around 20 days, 14 days to expiration or something. You want to just get a chunk of it.
Right. And I mean, I kind of see where you're going. You know, you want to use open interest just to get an idea where other people are placing bigger bets. You know, you're looking at the 500. Well,
Now,
it's
maybe Moderna is not the best stock. It's just because that's what I had on my screen when you asked me which stock, and I traded
Yeah.
the last couple of days.
Okay.
But there are, in other words, actually, the fact that maybe Moderna is not the best stock goes to the source of my question. Do you have a screener, or is there a way to screen for gamma? In other words, to just like you filter for different, you have a whole slew of screeners for different open interest and this and that. Well, can there be a screener for gamma? No.
Yeah, so this is not as much gamma as you're looking for a big concentration of open interest around a strike, and you're looking for a potential pin. You know, I would say like with 3 days to go, or even 2 days, 1 day, I don't think it would be easy to find a pin. If you're finding a pin, you know, at a strike, you're usually going to see it maybe that day in the afternoon, where you're like, whoa, the stock's not moving from the strike. And that could change too, you know. I don't think it's a reliable way of, you know, doing it. But if we just wanted to take a look at here, let's just take a look at the open interest, because this is basically, you're looking, one of the criteria is open interest, right? So if we just go by option contract,
You can maybe infer certain things. If open interest is a large strike, while you can infer that maybe the rehedging or the gamma is probably also high around that open interest.
yeah, and it's not, and I think the point I'm making is it's the options maker, the options don't always determine where the price of that stock will go, right? It could just break right through because there are other players. Any news, you know, and all bets are off, right? The options.
Yes, it assumes that everything is as is, but any binary event can just throw that out the window.
Yeah, or at any moment, you know, there could be just a big buyer or big seller that shows up. Even without news, it's possible, right? We don't really know. There are a lot of players involved there, but and any news can come out at any time as well. It could be even market news that could drive the entire market up or down. But we could take a look at, you know, concentration of open interest. So I'm just going to use one of my presets, large open interest concentration. So here, you know, we could just take a look where there's the majority of open interest is kind of around one strike, right? So that's one way you could take a look at it. So here, you know, you got an ANAT, this one's coming out further out, but 54% of all the open interest is just on this one strike, on one contract. You could also take a look at it as a percentage of the average daily volume. That might be even a better way of looking at it. So, sorry, what's that?
No, I said, okay, I'm following you. Sorry.
Yeah. So here, you know, the open interest in this one particular stock, SII, right, November 35 call, there's 10,451 contracts that are open on this one line. There's just this one particular call. But the stock itself trades only 74,000 shares a day. So this open interest, if we converted it to all stock, right, that's over 1 million shares. That's a lot of shares considering, you know, that it only trades 74,000 a day. That's 5 times. Just the options alone, right, converted to stock is 5 times the average stock volume on an average day. It would take, 5 days to cover all that, or more than 5 days. So that could have a significance if people have to rehedge, or cover. So maybe something like that, is a potential, but it's
Yes,
hard
yes.
to know exactly. Sorry, what's that?
No, no, I was saying yes. I see it. Sorry, I talk out loud sometimes.
Yeah, no problem. And it's a good question because it's a good discussion, and you start thinking about, well, what are ways to screen for a situation that might be worth, just to take a look at, and why is there a lot of open interest here?
Do you have an expiration date as a screener, as a filter?
Yeah, you could use it as there's a expiration. Let me just take a look here. I believe there's an expiration here over here, right? So we could just do
Okay.
expiration, or you could just do like, you could do the next, what's this, today? You could look at today's. So nothing that meets that criteria today, or the 13th. I mean, I could let go of this criteria and just look at the 13th. So let's just do by the 13th, and I'll just screen by here. So, so some of these stocks potentially, just because they don't trade a lot and there are a lot of options there. So if there's rehedging, it's potentially could impact it, right? Because you've got the number of shares to rehedge is way outweighs like what the average daily volume is in the stock, right? Because that's what we're looking for. Well, can the stock absorb this? And in most cases it can, in places like Google, Moderna, it would have to be a lot of open interest, something unusual, for it to be very impactful. So, these are kind of ways maybe to start looking at it for, either potential like pin but the more days out you go, the less impactful it is, right? It's really is if you get very close to expiration, and it's very close to
not only that, the further out you go, the bigger probability of a binary event occurring that will just throw your thesis out the window.
Exactly. So it's like you have to close that time. The lower you go, the more relevance it has. So with a minute to go, it's more relevant than with like days to go. So,
but you have to balance. There's always a trade-off. You have to balance the long-term vega versus the short-term gamma. But gamma, you got theta. So theta is working for you if you're a premium seller. But then you have the gamma risk. And this is a bit. No, I'm just like every other trader. We're trying to look for an edge, and try to. Except I'm not trying to pick necessarily a directional trade. Because the market moves randomly, and you get wagged like a dog's tail if you're not careful. So I'm just trying to slow things down and say I want to pick a range. I don't care what it does in between, but I just want to pick a medium-term range within 30 days, and if it's within $5-10, and I can only collect 50% of my premium, well, that's 50%. No?
Right.
And I'm just like every other trader. I'm trying to look for an edge.
Yeah. And I think the important thing that and of course you could use different data points as guidance, as reference points, and open interest obviously is one of them. And as just a trader, because like I'll hear different people say different things, and one of the most important things about trading that I learned is that when you do a trade, you create a thesis, just like you did, which is smart. And then you test that thesis, and you have to win or lose, you need a takeaway. Because sometimes I'll hear people, well, I did 5 trades, I've lost 4 out of 5 trades. So either, I'm doing something wrong, or your statistics are wrong, or your data is not good.
You could be right, and the sample is just too small.
Yeah, exactly. But
you're just hitting a bad streak, like on a heads or tails.
Exactly. Just like on a heads or tails, you could have been doing the right thing, and just because you're playing a game of chance, right? Uncertainty. And the other thing is you want to learn, well, go back and like what were you expecting to happen? What actually happened? What happened that you didn't take into consideration? And it's kind of like almost like a science experiment where, you have a thesis and you think, if I do this, this is the outcome I'm expecting. This is the outcome I got. What can I change about the experiment? What did I learn? And if you're not doing that, in my mind, you're not even trading. Then if that's not in your equation, then you're just gambling. Then you have a gambling fix that you need to, satisfy, but you're definitely not trading, in my opinion. If you're not learning, if you're not creating a thesis behind your trades and then not going back and learning from it, then in my opinion, you're not even close to trading.
Okay.
But what you're saying is exactly right. You're developing a thesis first, right? And this is what I believe, based on this data, based on this is what I believe the outcomes will be. Now, there are two ways to do it. First, you could just record observations just to validate your thesis. And if you have enough validations, then you could start experimenting small, right? To then, that's the second form of confirmation. Then you start getting feedback from actual trades. And what else is there in the trading that you can improve? But you're absolutely right. You got to form a thesis. It has to be logical, and then you want to look at the observations and validate it. You don't actually have to do the trade, right? You already picked one out. You picked out Moderna. This is what I would do. This is why. What was the outcome? And that's how you improve. Have you guys ever seen the movie Queen's Gambit? It's about chess.
Yes, one of my favorite. Love it.
And when you think about chess, right? Trading has an infinite number of more variables involved in chess, because you don't have just a set board with set pieces. But even in that, the very best experts, before every game, what did they do? They trained, they tested strategies, they retested different moves, you made notes. So even with chess, where it's not in as many variables involved, they always trained and tested and took feedback, all the way up to the last game. They never sat back or said this doesn't work. They took the feedback, learned from their mistakes, and said, well, how do I improve it? Right. And that's how, in my mind, if you're not doing that with trading, then you're not really trading.
Okay. Well, I just realized, sorry guys.
I'm just saying some of the feedback that I get, that's why I'm saying it.
Hey, D, you've gone underwater, buddy.
Let me go out and come back in.
All right. Hey, Albert, great job.
Yeah.
Thanks so much,
guys. I just realized that. Sorry.
Oh, I said that was great. Thanks for coming back. I appreciate that.
Well, thank you guys for having me. I just realized I monopolized your whole half hour, but the conversation just took off, and I was listening, and I really appreciate what you guys do. This is unique. We don't get often this experience. Actually, first time I hear anybody that will let people come in and ask the questions live, and any chance I get, I evangelize your site to other people in my trading community.
Well, we appreciate that, Albert. And believe me, you're not monopolizing the time. Bob is on raising his hand, and so are Stephanie. And Bob and Stephanie, we appreciate you so much coming on, and we will get you tomorrow. And I know Stephanie D actually came over from our IBKR, so she's got a lot of questions. So Stephanie, if you can make it tomorrow morning, we'll get to you. If it's not till next week, we'll get to you. Whenever you get back, Stephanie, we'll get to you. And Bob, I think, had a question related to Albert's, so we can get to that tomorrow. Albert, great job today. Thanks again for stepping up and bringing it. It was a great job. Thank you, buddy.
Yeah, it was a very good question, and I think that it just brought up just other things in the discussion. Again, like with the game, maybe, test it out, see if you get good feedback from it, share it with us, how you use open interest, because people use it differently, obviously, and sometimes
Well,
you know you.
I use, to be honest, I use, there's another service out there. I won't mention the name. It doesn't cause a conflict with you because they offer something totally different.
That's
Albert,
okay.
you can mention anything you want. We're open and transparent here, and Chameleons constantly mention other things.
Well, I use a site called Spot Gamma.
Okay.
And they have a lot of these metrics, but I love your site because you have a different set of metrics, and if they would be combined on the same like screen filter, searching for highest open gamma, highest call gamma, highest put gamma, positive or negative, and the top gamma expiring this Friday type of thing. No, so this allows me everything on one screen would have been super great.
Okay. Yeah.
You can check it out, unless you probably maybe already heard of them and know them.
I mean, I'm not familiar with them or what the metrics, you know, what the metric is, but you know, if you find something that you think, you know, well, this was helpful, definitely email and say, well, you know, I think, and I'll take a look at it, run some analytics, because if it's helpful, no problem. We want to create things for the community that we think, you know, will help them and support them, and you know, show them something different that is useful. So
actually, Stephanie just typed in she knows Spot Gamma as well. Just
okay.
Some of your viewers are also members on Spot Gamma. I think Raj, he's also a Spot Gamma user.
Oh, that's interesting. By the way, we do a little self-plug. We have a show with Raj next Tuesday, the monthly show with Raj, who's one of the founders of the Discord group. If anyone wants access to the Discord group, email me at williammcbride@gmail.com. It is now 9:32. We have a question from Bob and Stephanie. We'll get to those tomorrow or whenever they come back. Stephanie, I'm sorry we didn't get to you today. And she did say no video. We will never show a video of anyone unless someone asks for it.
Yeah, unless you want. Yeah, you don't need to turn on your video camera.
Yeah.
Just, you know, but talking it out helps for sure.
All right, great job, everyone. Hopefully, Bob, Stephanie, you come back tomorrow. Chameleons, remember to vote. You can vote daily on the Benzinga. I put the link in there. That's super helpful to us, the Chameleon community. Thanks, D. Thanks, Albert.
All right.
Have a great day.
Thanks,
Thanks,
guys.
Dimitri. Thanks, Will. Thanks
All
again.
right, trade in peace.
Everyone. Yep. Have a good trading day. Stay safe out there. Hope to see you guys tomorrow.